Thanks for turning up on a Saturday morning. I was walking around the stalls before, and I think, with a little bit of careful shopping, you could probably kit out your wardrobe for the next few months. There's so many T-shirts being given away. I'm Paul Clark. I'm the CIO of Chase Bank. You may not have heard of who Chase Bank is. You may have done. I'll give you a little bit of background about who we are and what we do. But what I'm going to largely talk about is the banking industry and how digital technologies and customer experience are really kind of changing the way we think about banking and why banking has been resistant to disruption in the same way as other sectors have been. So that's the kind of what we're going to be talking about. But before we do that, I'll tell you a little about us, Chase Bank, who we are, and what we do. So we are obviously owned by JP Morgan. JP Morgan is one of the largest banks on earth. I think it might be the largest bank on earth. We just recently overtook a Chinese bank that you've never heard of, I've never heard of, in market capitalization. So I think JP Morgan is technically the largest bank on the planet right now. Chase is a brand in the US, which has been going for a very long time, about, 50, 60 years, has about 60 million customers. Chase UK itself is a bit newer. We set Chase UK up and launched it into the UK market back in 2021, September of 2021. Since then, we've had a huge amount of traction. We've grown to 1.6 million customers, 15 billion pounds worth of deposits. We do about 1 million transactions a day through our payments platforms. So quite high volumes, and it's kind of scaling all the time. But nicer than all that, recently, in the last few weeks, we were also voted the best bank in the UK, the best current account, and the best savings account. So real kind of validation of what we've been doing. And although we are owned by JP Morgan and there is a Chase brand in the US, we didn't take any of their technology. So we decided that we wanted to build a bank from scratch in the cloud. And there's some people here today. Alex is kicking around on the stool. He was one of the first people there. I mean, I think he might have even committed, that chap over there may have even committed the first line of code. We built the whole thing from the ground up for a very good reason. You know, old banks are saddled with lots of legacy technology, and if you want to be a digital bank and you want to provide the best possible customer service, then you probably should start from the ground up. So we did, and you'll recognize a lot of the logos on this page. Whether it's Java or Kubernetes, Kafka. These are very familiar technologies, I'm sure, to everybody in this room. But the point here is, it's greenfield. We built the whole thing from the ground up. And we employ people in 3 locations to help us do that. So we're based in London, in Canary Wharf, with all the other bankers in one of those big towers, big shiny towers, if you're familiar with that. We have a center in Bangalore, but also, and this is why we're here today, we're opening a technology center here, in Bangalore, and we're here because we're opening a technology center in Warsaw. So right now, and you'll see the stand out at the front when you come in, we're hiring 150 software engineers across all the disciplines. So if you're a Java engineer or a test engineer, if you're a React Native engineer, if you're a cloud platform engineer, these are the skills that we're looking for. So if you're interested, go and speak to the stand out the front. Mike's out there at the front with our recruitment team. We've got a small footprint today, about 40 people here. But as I say, over the next sort of 12 to 18 months, we want to expand that to about 150, and then on and on. So that's us, a little bit about us. That's the end of the sales pitch, I promise. I'll now talk a little bit about what I came to talk about, which is disruption. What is disruption? So what do I mean when I talk about disruption? So you'll all be familiar with these stories that I tell you, but there's a kind of common theme. So years ago, we all used to sit down to watch television, and everybody sat down and watched television at the same time, at the same point, and then you go into work the next day and you talk about television. And then we moved from a kind of linear world, which is the kind of television that we're familiar with, to a non-linear world, a streaming world. And the difference between the kind of linear and non-linear was ease of access and customer experience. And the thing that kind of delivered that was technology. By the employment of kind of innovative technologies, it allowed us to go from this kind of world where you got told what to watch and when to watch it, to a world where you could choose what to watch whenever you wanted to watch it, And the thing that underpins it is the customer experience. We make the customer experience so much better. We give the consumers the choice, and we drive that choice and make that availability through technology. And so that's kind of Netflix, right? We invented Netflix and got rid of television. But we didn't just kind of invent how you consume. We also, we didn't just change how you consume. We also changed how you create. So YouTube came along, and it used to be the preserve of only the technology companies, the broadcasting companies, that could do broadcasting. And broadcasting was expensive. You had to have large infrastructure. You had to spend millions of pounds on broadcast decks, playout decks, cameras, lighting, et cetera, et cetera. And then YouTube came along and changed all of that, right? So now you've got guys like Mr. Beast. Mr. Beast started broadcasting from his bedroom when he was 13 years old. He's now got 116 million followers on YouTube. I don't follow Mr. Beast, by the way, but my son does. And you know, we changed the paradigm. We went from you had to be a massive broadcast infrastructure to do it to anybody could do it. And again, the thing that underpins that is ease of use. It's really easy for people to do this, so customer experience, and technology. The technology is available because it's built in a certain way. So we disrupted television. And then we disrupted taxis. So right now, Uber has about 13% of the global taxi market. 13%. I mean, it didn't exist 15 years ago. So how do you go from massively ingrained kind of market, i.e. cars and taxis, to something like an Uber? Same story. Technology comes along. It makes the experience affordable to build a taxi service. And then the customer service is layered on top of that so that it's very easy for consumers to use the product. And equally, it's very easy for a driver to sign up and become a driver, right? So it's exactly the same thing again. We take the application of technology and the ways we build technology in modern ways to really lower the cost of disrupting a market and provide an excellent customer service. And those two things come together, that lower cost, that excellent customer service, to disrupt the market. So this is happening everywhere. And another one that you'll all be intimately familiar with, Airbnb. 20% of the world's rental market is now Airbnb. And like, they don't own a single hotel. They don't own a single hotel, and yet they account for 20% of the world's hotel market. Didn't exist 10, 15 years ago. How? Same story, right? There is a technology that makes it cheap and available to build a platform that allows people to come in and be hosts or to be renters. And the customer experience is so easy to use and it's so easy to execute that people flock to it because it's a much, much better service. So this is the kinds of disruption that I'm talking about. So let's talk a little bit about banking disruption. So if all of these things, all these sectors have been disrupted, whether it's television, whether it's taxis, whether it's hotels, what's happening in the banking world? So banking is kind of a bit older than those things. Probably as old as hotels. Probably a bit, definitely older than taxis. Definitely older than television. Right? Banking's been around for quite some time. This is, I just know. I googled bankers and I got this. And this is Venetian bankers. So banking in its current form has been around for probably about 2,500 years, right? Started in the market, in the merchant capitals of Italy, Venice, Florence, places like that. And it was quite straightforward. You had too much money, you'd take it to somebody, and they'd look after it for you. If you had too little money, you'd go to that same person, and they'd lend it to you. And that person, believe it or not, sat on a bench next to the canals in Venice. And that bench in Italian is banco, and that bench became a bank, banking. And this is what it looks like. But the interesting thing about banking is that there is actually no physical product, unlike, except for coins, right? Coins and notes, but there's no real physical product, just numbers on a ledger. Unlike a taxi company where you need taxis, or a hotel business where you need buildings. Banks don't actually have any physical product. So it should be something that's really kind of ripe for disruption and modernization, etc. Now, in the UK, back in 2008, after the market crash, the banking crash happened, the government changed the legislation, and they said, hey, we should make it easier for banks to be set up. And in setting up these banks, we hope to drive innovation and change, make the banking market work better for the consumer, make better products. And I mean, there's no shortage of people kind of turned up and said, hey, we'll do that. We'll build a bank from scratch. And this is the list of names that's been launched, banks in the UK since 2013. The reason I kind of highlighted this one is because I built that one, Tandem Bank. Here's one I made before I joined Chase. So, there's no shortage of companies that are trying to disrupt or want to disrupt the banking industry. And this is not just a UK thing, right? This is a Europe-wide thing as well. Just this week, earlier in the week, I was fortunate enough to go to the offices of M-Bank here in Warsaw to meet the people at M-Bank. And I'm sure many of you in the room here, bank with M-Bank. It's a great bank, right? Great digital bank. How did they do it? The thing, great technology, great customer service. Definitely a theme there. So, in the UK we're doing it. N26 are trying to do it in Germany. M-Bank are trying to do it in Poland. I could reel off kind of loads and loads of digital banks. But we're not quite there yet. As well as digital banks, there's these other kind of financial services that we see kind of popping up. So, everybody's familiar with Klarna probably. They've got about 150 million customers. But actually, it's not particularly revolutionary. It's like buy now, pay later. What a wonderful thing. It's not really. If you've got a credit card, you've got buy now, pay later. The difference between Klarna and your credit card is 4 days. Because you get 56 days interest-free credit with a credit card. Those 4 days represent about 0.2% APR. And credit card gives you a hell of a lot more flexibility than Klarna. So it's not really a new product. It's not really changed the market. Revolut, who I think are speaking here later on, they came along, tried to kind of disrupt banking. They haven't quite yet managed to get a banking license, but they're trying very, very hard. They're seen very much as a kind of crypto business. I think they make most of their money out of kind of crypto trading. Very, great product for holding multiple currencies and flipping them. But is it different? Is it changing banking? Is it disrupting banking? Probably not. The products are kind of similar to what's already been there before. And the third one on the list, Funding Circle, you might not have heard of them. They're a kind of peer-to-peer lending business. But they started off peer-to-peer, but peer-to-peer didn't really work. They were trying to disrupt the kind of lending business. Didn't really work, and then they kind of flicked back to just being kind of institutional lender. So, examples of almost resistance to change, right? So although these new products are coming along and trying to do something slightly different, they all end up coming back to the traditional banking products. And we could go on. There's been some people that tried to do it really way out. You may not have heard of these guys, Wonga. They were basically loan sharks in the UK. They came up with an idea saying, hey, we'll give you payday lending. But they were charging astronomical APRs, like 5,000%. And the whole thing collapsed in the end. Rate Setter, again, another peer-to-peer loan business, similar to Funding Circle, came along, tried to set themselves up as a peer-to-peer lending business. Let's innovate, let's disrupt. With products, didn't work. And then offset mortgages, another disruption-type product in the market, which if you're a kind of very financially savvy person that has a huge amount of savings, offset mortgages work really, really well. But for most people, it's just too complicated. So people have really tried to disrupt the banking industry by using different products and trying to, offer a product that doesn't exist or is similar to, but not quite the same as existing products. But after all the effort, it still looks the same. It's still, okay, I could put a picture of the Venetians before, but equally you could put a picture up like this. It's banking kind of is largely the same as it's ever been. It seems to be strongly resistant to change. So if you can't disrupt banking by coming up with different products, what is banking disruption? And there is a reason why it's really hard to disrupt banking, right? The reason it's really hard to disrupt banking is because banking is a highly regulated industry. And the regulators want products to look the same. They want each bank to offer a similar set of products so customers can choose and make informed choices. And so the regulators don't want you to do something wild and wacky, because if you do it wild and wacky, it's very confusing for the customer. It doesn't create a market where people can make informed choices. So if you can't disrupt with products, what can you disrupt with? And the answer is this. And you all know it, because you work in it, and you do it for a living. If you just want to disrupt banking, you don't disrupt the product set of banking, you disrupt the cost model of banking. And this is how you disrupt banking. And the first time I tried to disrupt banking, Tandem Bank, the example I talked about earlier, I was convinced you had to create different products. And we tried it. We tried to create a different kind of credit card and a different kind of savings account. All this didn't work. The regulator knocks you back into shape and says you need to do this thing. So if you want to disrupt banking, you can't disrupt the product set, but you can disrupt the cost models. And the cost model is disrupted in the same way as we talked about before with the Ubers and the Airbnbs and the Netflix, which is to build modern technology stacks that scale to millions of people globally on a single operational platform where you build it, you run it, working in small little agile squads and going at blistering pace. If you can then build a single technology platform that you can scale out to millions of customers in multiple markets, then you can disrupt it. And that's exactly what we're doing at Chase, exactly what we're doing at Chase. So, we think about banking in the same way as Google thinks about search. We think about banking in the same way as Meta think about social. We think about banking as a tech problem. If we can solve the tech problem, and if we can build software that is very open to change, has really low MTTRs, that we can kind of iterate on it really, really quickly, and if we can control the cost model, then we're in a really good place. So many of you in this room may have worked, or may even today work for banks. And if you work in a bank that's been going around for any amount of time, you'll often hear the phrase, change the bank and run the bank. Oh, is that a run the bank activity? Like, what does that mean? And it's a kind of legacy mindset of not being a product organization. And I often joke at work when people say, oh, is that an RTB thing? Is that a run the bank thing? I say, do you think they have like Run Google? Do you think there's a team, Run Google team and a Change Google team? I don't think that really exists. So the tech that we have has to be the same sort of tech that a Netflix, a Google, a Meta, an Amazon, that all these companies have. And that's what we do. I mean, you saw the slide I had up earlier at the very beginning when I was talking about Chase and the technology kind of, and you'll see the same logos as you wander around. We build tech in the same way as the best tech companies build tech. And interestingly, we tend to skew very heavily for engineers that haven't got banking experience, because people who spend all their life in banks, especially the kind of older banks, see tech done in a certain way. And although we do, of course, employ those people as well, we try to kind of mix it up so that we have a kind of very good understanding of how to build tech. Now, one of the things that people say is like, oh, that's great. You build it just like Netflix, but Netflix don't have the same kind of regulation as you do. But that's okay. Yes, we are a heavily regulated industry, and of course we should be a heavily regulated industry, right? We've got 15 billion pounds of people's deposits today. That number's going up all the time. 1.6 million customers that depend on us every day to buy their coffee in the morning or buy their lunch or do whatever they want to do with their money. So our tech has to work. And so therefore we have a very strong control environment. But that's good. That's good because it presents us with a series of interesting problems to solve. How do we create very secure, very scalable, very resilient platforms where a failure of any component, and Werner Vogels from AWS, he says this all the time, right? Everything breaks all the time. So how do you build architectures that can deal with these kind of failures, gracefully degrade the service that's gone down, and then when that service comes back, gets itself back to consistency. So we kind of think of the control environment and the regulations as an opportunity to standardize what we do to help drive productivity, because through standardization, by creating a paved path that's so easy to walk along, then all your engineers are going to do it. We create a control environment that then helps us go faster, become more productive, more scalable, more resilient. So all the best things that you would get in a modern tech company, like a Netflix or an Amazon, but with this kind of additional kind of a layer of building kind of strongly resilient systems that are like very secure as well, because of the amount of money we have. So we see our control environment not as a problem, not as a kind of thing that brings us down, but as an opportunity to do well. So that's my thesis, that disruption in banking is not actually possible at the product level, but it is possible at the cost model level. And the real benefit of this is not to the banks. Like, we have a choice, right? If we make a load of money, and you know, bankers aren't necessarily the most popular people in the world, but we have a choice. As a company, we can make a profit, and then what do we do with that profit? Of course, we return money to our shareholders. That's why we exist. We're a commercial organization. We do that. But also, we can take some of that money, and we can put that money into customer service and lowering the cost of the products that we offer. So the consumers get a much, much better banking service. And this is why we ended up winning Best Bank in the UK a few weeks ago, as voted for by the customers. Because the customers love the products that we have, they're priced very keenly, and they love the customer service when they deal with us. Many of you will have the experience of picking up the phone and phoning your bank and being put on hold, or pressing 1 to speak to this person or 2 to speak to that person, and when you speak to that person, they say, well, I can't help you. We don't have that. Someone picks up the phone and they deal with your problem. And that's because the money that we make from running the bank, we put back into the customer service. A bit like Airbnb that we talked about at the beginning. How do you disrupt those industries? By creating great products based on modern technology that provide great customer service at a great price point. So that's how disruption in banking is going to happen. And that's why the banks that think of banking as a tech problem rather than a banking problem, as we do, are going to do best. It all sounds really easy, doesn't it? Like, hey, we just build a really cool tech platform, price up the products, build it, they will come. What could possibly go wrong? Well, it turns out it's really hard to get people to change banks. So it doesn't matter how good your tech platform is, people are like, meh, it's a bank. And so this is a chart that shows the number of people that use the thing called the current account switching service in the UK. So the current account switching service is a way to move from bank A to bank B. So if you hate your bank and you want to come to Chase, go to the current account switching service, they'll do all the hard work for you. Everything moves across. It's great. This is from 22, so this is last year. I'm sure some of you have already done the maths and added up this column. It's about 1 million people. So UK, about 50 million adults, 1 million of them change banks. But the thing that's in our favor is that there's always new people coming into needing a bank account, right? It's a generational thing. You get to 18, pass your driving test, get your first job, you need a bank account. And the bank account you'll choose is the bank account which gives you an experience which is like the experiences you enjoy the most. So the bank account you will choose will be the bank account that the same experiences you get from Snap or Spotify or Netflix. You want that kind of great digital experience. Because you're not going to go and compare all the bank's digital experiences. In your mind, you already have an expectation of it's really easy to use, it's digital. You know, it works like my other apps on my phone. And so whilst we can't click our fingers and make millions of people move over to Chase, we will in time, as people kind of come into the market and youngsters come into the market and people discover our product, they'll move over. So it's a kind of long-term thing. Yes, we've built a platform. Yes, it's great. Yes, it's like any other modern tech platform. Yes, we are getting traction, 1.6 million customers already, but it's a kind of 20-year bet. So Chase is not here to do this in 5 years or 10 years. It's a 20-year bet. And interestingly, when I was in the offices of mBank earlier in the week talking to their CEO, he was saying that mBank didn't break even in Poland for 7 years. They thought they could do it in 5. It took them 7. That feels about right. We've been going for 2. Feels about right. But we're actually going to do something very different to mBank, because not only are we going to be able to make people switch in the UK, we're going to roll our bank out across Europe. And so right now we're plotting how to put the bank into the next country in Europe, which is Germany. I think that's quite common knowledge. But this idea of a single banking platform that we can capture market share in a number of European countries will then allow us to kind of accelerate our break even. And how do we do it? It's technology. And it is paying off. This was another report. I should really update these slides, really, for this year, shouldn't I? This is another report showing the top apps for finance in the UK. You can see we're right at the top. If you go to Apple's App Store today and go to the finance area, I think we're number 5. Android, we're number 6. Right? It's getting traction. And it's a slow burn. And we will get there. And the thing that's great about it is we can keep rolling out more and more products, not differentiate products, because the savings account is a savings account, current account is a current account, but products which are more keenly priced, give better customer service, and that we can scale on a technology platform that won't become too expensive over time. So the marginal cost of each customer comes down and down and down. That's what we're doing today. We're doing that at Chase. So if you're interested in that, if you're interested in how we think about disruption, and if you're interested in technology, then email me. This is my email address. Drop me an email, say hi, say you want a job. Or better still, go and speak to the people out the front here who would love to kind of tell you more about all of this, love to tell you what we do. We've got some of our engineers. You can go and walk through some code. We'll share some code with you, show some of the dashboards that we've got, some of the Grafana dashboards. Alex and the gang will show you all this stuff. We're quite happy to kind of show you what we're doing, but at least come and talk to us, right? We're not a bank. We're a tech company that does banking. Come and talk to us. Thank you.